Hey guys, I'm Duncan Wilson.
And I'm Sasha Syed, and you're listening to the Mortgage Sweet Spot Podcast, proudly presented to you by Mortgage Suite.
This podcast is your go-to source for expert insights, innovative strategies, and the latest mortgage trends to help you make the most informed decision regarding your mortgage financing. Whether you're a first-time home buyer, a seasoned real estate investor, or maybe somewhere in between, you've come to the right spot.
So sit back, relax, and get ready to discover your mortgage sweet spot. What's up, everybody? Welcome to another episode at the Mortgage Sweet Spot. It's me and Alex hanging out again today, and we're going to talk about a guarantor versus a cosigner.
All right.
Lead into it.
Sounds good. So there's two primary ways that somebody can come in and assist a borrower get a larger mortgage amount or improve the credit on file. And that's usually, mom and dad are helping out their kid because based off of certain income restrictions, maybe they can't qualify for a house. Maybe the house is just a little bit too expensive and they need a little bit of extra juice on the application. So they do that by either co-signing on the mortgage or acting as a guarantee on the mortgage. A co-signer is signing on to both the mortgage and the title of the property. So There is some kind of ownership structure involved there. We can break that down a little bit later in the differences of joint tenants and tenants in common and some strategies around doing that to protect the parents in this situation from capital gains down the road. And then there's acting as a guarantor. And that's when you sign on only as guarantor for the mortgage, but you're not on title of the property. So you're guaranteeing the loan, you don't have any ownership of the property. And that's good for shielding yourself from capital gains because you're no longer a beneficial or a legal owner of the property. You're just helping out to make the loan itself a little more creditworthy.
So leading into this, you mentioned capital gains. So why don't you give a little brief explanation about capital gains to the listeners in case they don't know.
Sounds good. So capital gains is a nasty little tax. When you sell a asset for a gain. So say you bought an investment property at $400,000 and then in 10 years you sell that for $500,000. In theory, your capital gain on that is going to be $100,000. There's different accounting metrics and ways to reduce that figure, but I'm not an accountant nor a CPA, so don't listen to me on that. Talk
he
to
just
your
looks
accountant.
Like one.
And in that scenario, you have a $100,000 capital gain for the tax year that you sell that property. Now, that is not all added into your income and then taxed. There is what's called an inclusion rate. So 50% of that gain is then added to your income. So in this case, you would have an extra $50,000 worth of income in that tax year. And then you're taxed on that $50,000 at whatever your tax bracket is at that point.
Interesting. So isn't there some new law now about having a second home or like vacation homes and capital gains? Is there something new about that just came in?
So there's an increase to the capital gains tax rate from 50% of that inclusion rate to 66%. So instead of being taxed 50% on that gain, you're going to be taxed 66.
Okay. So does that lead into like if I'm a cosigner on my kid's house and then we end up selling that house in 5 years down the road? Am I stuck for capital gains on that, being the cosigner, if I already own my own property? It's
possible. That inclusion rate change really only comes into play when the capital gain is larger than $250,000. So in this situation, no, I don't think if you're co-signing on your kid's mortgage, you're going to be thrust with that. And ideally, if you're setting it up properly up front, you're going to register a different kind of title. Instead of joint tenants, you're going to register your title ownership as tenants in common. Perfect. And the big difference there is joint tenants, you're splitting it evenly amongst the people who are on title. So if you have two people on title, you're both 50-50 owners of the property. If you have three people on title, you're 33% each ownership of the property. When you register it as tenants in common, you're able to maneuver that ownership percentage up and down. So if I am a parent, I'm co-signing for my kid's mortgage, I want my kid to have 99% ownership of that property, and then I would have 1% ownership. Oh. So I'm able to assist, I'm able to co-sign on the mortgage and provide some security to the lender, saying that, hey, if my kid's not making enough money, if he's not able to pay, I can come in and I'm liable to make that payment and cover his ass. However, I only have 1% ownership of this property. And because of that, in that situation I was talking about earlier where there's a $100,000 capital gain, you're only on the hook for $1,000 worth of capital gain.
And who sets that up? Is that like a lawyer thing at closing?
That's a lawyer thing at title.
Yeah. Okay, perfect.
Yeah.
And so like say I co-sign for the kid on a 5-year term, and in 2 years, kid's making great money now, totally can afford to pay the mortgage by themselves. Like, do we have to refinance to take me off, or can we just go to the Land Title Registry Act or office and get me removed? And
so the big thing on that one is making sure that the lender's included in the process. And it is going to depend on the lender's specific policy on that.
Okay.
Some of them are okay when it comes to reassessing the file at no cost to the client and just saying, okay, well, the kid got a raise of $50,000, no longer needs the cosign. Everything's still qualifying based off of our ratios and how we calculate, the lender risk. We'll just go talk to the title officer, maybe bring in a lawyer. The lender might be able to provide that as well. And then they remove the cosigner off of title.
Cool. So what are some benefits to having a guarantor, specifically for just a guarantor?
So the guarantor is obviously, well, not obviously, it's ideal for the primary reason.
Everybody knows what we're talking about, obviously.
Yeah. It's ideal for the primary reason where the guarantor itself is not on title of the property. So they don't actually legally own it. They're just on there to cover the loan should something go bad. So it just simplifies that process. The only reason why they're not more common is because there is a little bit less liability on the guarantor versus the cosigner because of that title ownership. So a lot of lenders prefer it to be a cosign versus a true blue guarantor. But there are more and more that I'm seeing that are embracing the guarantor way of life. Sure. It's more common for a guarantor to be a guarantor to be coming out and helping out with a loan for credit purposes. So say the primary borrower has a beacon of 620, there's some concerns on credit, and the lender would be more comfortable if there was a high credit borrower, somebody with an 800 beacon on file, just to put their minds at rest. They don't necessarily need the extra income. They just want more credit history or repayment history on file. That's when a guarantor would be more popular.
Perfect. All right. I can segue into this one about cosigners because I do a lot of stuff with cosigners. I've not really done anything with guarantors. So one of the bonuses for me doing this podcast, like with Duncan and now with Alex, is I get to learn a bunch of new stuff. So cosigners is coming directly at the income part, your debt service ratio. So if, a lot of times what we're seeing now with the market being so high, people are bringing in these cosigners to be able to get more purchasing power. So for example, most people today are pre-approved for something like around 275, 300, maybe 350. But we all know that houses are going for 400, 500 now. So getting on there, we're seeing a couple of different things. Some parents are maybe remortgaging their house to help with down payment, or they're just coming on to the file as a cosigner. And they're putting on their income and their liabilities are also accounted for. So if you're asking your parents to cosign, hopefully they don't have too much debt going on. But yeah, that helps with lowering the debt service ratios, which in turn will give you more purchasing power.
Yeah, in the eyes of the lender, you're going to get a little bit more purchasing power because instead of say, you have $65,000 of income on file, you add in another 50, and the file's a little bit more attractive. Lender's more comfortable lending you more money.
Yeah.
Now there is one big thing that I would note here, and this is where just because we can get you approved for a loan, maybe it doesn't mean we should.
Yeah,
if
that's true.
If you're asking for a cosign with no intention of that cosign helping you out for payments, it's important to see what that mortgage, at that higher figure is going to look like on your bottom line and in your budget. Because just a general point, lenders don't want you to be spending more than 40% of your gross income on their mortgage. And if you make, call it $100,000 a year, they don't want you spending more than 40 of that on your mortgage payment and all the housing costs associated with it. So if you need a cosign to get extra loan, you're no longer going to be paying just 40% of your gross income. Maybe you as the primary borrower are spending 60% of your gross income on that mortgage. And note that I'm saying gross income. This is pre-tax income that we're qualifying you on. So if you're source deducted, say, you're working T4, standard salary, your taxes are taken out of every paycheck, you're going to be actually cash flowing 20% less, 25, maybe even 30% less than what your gross income is. So that makes it a little bit tough. So bottom line, get your Excel sheet going, maybe bust out a pen and paper and see what your monthly budget's going to look like. Because if you get, if you're initially qualified for a loan that's got a $1,500 payment, and just because we get a cosign, you can now get a $2,500 payment, you got to ask yourself, is it possible to make that $2,500 payment? Maybe you have a side job that just wouldn't qualify based off of lender guidelines, or there's another source of income that's just not fitting within that box. That's when it would make sense. But you don't want to hamstring yourself and pigeonhole yourself into a tight box, and you're no longer able to afford food.
Absolutely. And if you need help with that spreadsheet, come and call me or Alex. I know I got a bunch of spreadsheet templates already going for budgets and stuff. Sure, Alex
Certainly
can help you with that as well. So if you haven't done a budget, you want to do a budget and see what you can afford, come and call one of us and we'll help you out with that. That's
Absolutely.
An ancillary product. That's the word that Duncan uses. So I'm using it too.
Yes, sir.
And
ancillary, free.
Yeah, free product that we can help you out with. Lots of other stuff too. So ask us about that. Guarantor versus cosigner, your opinion, which do you think is better? And we already talked about some benefits. What are maybe some risks for these guys, for guarantors and cosigners?
I mean, the bottom line risk is going back to what I was just talking about. If you are cosigned or guarantor on the loan and there's an inability to pay for it, lender's going to be knocking on your door next and saying, where's my money? Yeah. You said you were going to cosign, you said you were going to guarantee this loan, and payments have been missed. So knock, knock, we're here.
I wish we can insert that what's his name now? Oh, God.
Stewie?
No, from God. Now I had it. Now it's missing. Where he says, "Show me the money." What's that movie?
Show me the money. Oh, Jerry Maguire.
Jerry Maguire. Yeah. I had it and then I lost it. Yeah.
Tom
I wish
Cruise.
we could insert that right there. So that's good. So some basically just risks for these guys are they're on the hook for the loan.
Yeah. Another thing too, if you are co-signing on, say you got a big family, you have 3 kids, they're all coming into that home buying age. If you co-sign on one of their loans, it's going to show up as a full liability for the next time you go to co-sign a loan. So if, you're co-signing, there's a $2,000 mortgage payment involved. On your credit bureau, it's going to show that you are responsible for that $2,000 mortgage payment. Even if you've never paid that payment a day in your life because somebody else is taking care of it 100%, when somebody is going to ask, or when you go and try to get qualified for a new loan, that $2,000 loan is going to be there, and it's going to impact your ability to get new money. So these are things to consider. Sometimes they don't report if they're a guarantor, but you don't necessarily want to take that risk.
Perfect.
If you don't have to.
Yeah. So basically, you're on the hook for the mortgage, and it can hurt you trying to get more money down the road. Is it the same for the guarantor? If I'm a guarantor, do I have to account for that mortgage payment on the new loan that I want to get?
It depends if that lender reports to the credit bureau or not.
Interesting.
But ideally, it probably will. Yeah.
Okay. Well, I mean, is there anything that we missed about this?
No, I think we've about covered
Maddie
it.
wants us to emphasize the importance of only agreeing if the borrower is likely to make payments. So if you're going to co-sign for somebody, make sure they're going to make the payments.
Yeah. Again, that kind of goes back.
It? Make sure they make the payments. But no, it is important. Don't be co-signing or guarantor for somebody who's going to, not make their payments and put you in a spot that is going to hurt you down the road. And again, if you need help with budgeting and knowing if you're, you can qualify, or if you got kids that want to qualify, sitting down and doing a budget before doing a mortgage app can be beneficial. Plus it gives all of us the opportunity to build rapport while we're doing that. So come on in and hang out with us and we'll have a look at it all.
Guaranteed. Cool dudes.
Yes.
We swear. We have friends.
Yeah. All right. So if you like this video, share it with your friends. If you need any help or you need any advice, you can call me or Alex. Duncan will be back next week and call him too. But call me or Alex. We'll help you out.
All right. 10-4. Thanks,
Cool.
guys.
Ladies and gentlemen borrowers, thanks for tuning in to the Mortgage Sweet Spot. If you have any suggestions for upcoming episodes or questions for our hosts, me and Sasha, throw them in the comments below.
And if you enjoyed the podcast, please subscribe to our channel on your preferred platform. We're available on Spotify, Apple Podcasts, or you can check us out on YouTube. Once again, thank you for tuning in, and we'll see you on the next one.